Hi there, Serial Trader here. Let's do a checkup on the major US indices heading into the coming week, and starting off with SPX here. So from an Elliott wave perspective, there's nothing to change from the last video from the previous week. We still haven't made a new high, which would involve getting beyond 3028 here. I think we made slight new high this week from last week. So let's see here. The high we had in the last video was 3020 and change. We went to 3022. So a couple points above last week's high, and then fairly firm rejection of that. And we closed the week with a little bit of weakness there. So nothing's changed that would make me change this wave count yet. Now we're still very, very close to the point of invalidation here. And if we do break this all-time high at 3028, that'll certainly warrant a change of this wave count to something more immediately bullish, at least in the short term. But as long as we persist below that key level, and particularly if we can really get going here, in some sort of downward move, still offers a very attractive risk-reward scenario here. I'm still personally short the one ES contract, and that was from around the 3010 level. So again, roughly a 20-point stop. My stop is at 3030. So a 20-point stop for a potentially, multi-100-point drop. From a risk-reward scenario, it's certainly attractive. I'm actually surprised that I didn't get stopped out last week, because we did get so close, within less than 10 points of getting stopped out. But the market seems to be struggling here to actually poke above those old highs. And, we certainly have some technical indicators suggesting, it looks tired. We have some bearish divergence here on the RSI and also the MACD moving averages. Now let's see, this is on the 4-hour chart. See if the daily, the daily, we also have a little bit of bearish divergence here on RSI. We made a slight new high in price this week, but a slightly lower high on RSI on the daily. And MACD moving averages seem to be starting to curl back down here. Now, how about the hourly? Hourly, it's pretty obvious here that we have significantly lower highs on the moving averages and also the RSI level, despite a slight higher high in price. So everything's set up for a potentially good downside trade, but now it just actually has to happen. And a very low volatility week that we just did. You could have just, not looked at the market the whole week. You wouldn't have missed much, really. But definitely still liking the scenario where we have this initial move down. And again, that's from our all-time high. We've had this very deep correction upwards. So far, in internal retracement, we haven't actually done a beyond 100% retracement. So as long as that persists, you can have a tight stop. If you get stopped out, we hit the all-time high. Very, very minor loss, especially, my position's tiny. It's one contract, 20 points on ES. That's a very small loss in my world. So I haven't added to the position. I haven't done anything. I've just left it alone. If it gets stopped out, it gets stopped out. But certainly good risk-reward setup here. And hopefully this week, at this point, I don't care if we break new highs or not. I just want to see something happen. Get a little direction in this market. This has just been kind of boring and choppy for the last little bit here. All right, so heading in this week, certainly if we break down below, let's see this level here. If we get below 29.78, that's a good early sign that we have some sort of little downtrend starting. Probably at least looking to close some of these gaps we have. And there are multiple gaps here that will at some point be closed. So that could be a nice little trade in itself, just closing those gaps, if nothing else. And again, this wave count will definitely need to be changed if we take out that key level at 3028. All right, so not really much to add there. Again, the wave count's basically identical to what it was in the last video there. So let's go to the thinkorswim candlestick chart. And okay, so looking at the daily candles here on SPX, you can definitely see some upper shadows, some rejection of these higher price levels. We did get a nice, reasonably bearish day on Friday. Not actually bearish engulfing candlestick, but certainly a negative day, and we did close below the daily T line. And you can see we were in the overbought condition on the oscillator, daily oscillator here, and we're now starting to come off that condition. So certainly plenty of room to the downside before we be in oversold territory. So certainly things are kind of looking like they're turning. Early though, a little more confirmation needed to gain confidence. And again, it would be good to see it, that this level taken out here on this hammer candle, and that was 29.78. Okay, and on the weekly chart here for SPX, let's see if we have anything interesting on the weekly. So on the weekly, last week we had a bit of a, you consider it a hanging man candlestick because it's kind of near the upper end of a price range. If it was in the lower end of a price range, it'd be more of a bullish hammer, but in this case, a bit more of a bearish hanging man last week. And then this week, looks like kind of a doji star, fairly long upper shadow, rejecting those higher prices. So certainly nothing too decisive here on the weekly. Again, we're still awaiting something of substance to happen on the daily before it'll really show up on the weekly. Okay, so that's SPX. Now on the Dow Jones Industrial Average, I'll have a quick peek at that. See if there's anything standing out. Okay, so daily Dow Jones. Okay, pretty similar to SPX. Looks like the Dow didn't quite make a new high where SPX did. So oftentimes at a key turning point, in this case, you know, we're looking at a turning point for it to turn down. You'll see one indice make a slight new high, a marginal new high, or a marginal new low. The other index won't, and that's kind of a non-confirmation. So in this case, we have a non-confirmation. The Dow was relatively a little weaker than the S&P, and that it wasn't able to break that previous week's high. And we did get a not a particularly notable candlestick signal, but we did get a decently bearish day on Friday and closed below the daily T line. Looks like we're about to cross below the T line with the 3T line. We're coming off that overbought condition, nowhere near oversold. So certainly by these metrics, looks like there's some potential downside opened up here. And the Dow certainly has these gaps on the daily chart that will be closed at some point as well. So perhaps we're beginning that journey to close those gaps. Okay, now good confirmation here of further downside will be taking out this candle's low, and on the Dow, that is 26,899, so roughly 26,900. So if you're looking at the Dow closely, that's an important level to take out here to get some bearish follow through. Weekly chart, nothing particularly notable, just a little bit of a red candle, basically an inside bar, so just trade within last week's range. Not a strong signal really. So certainly looking to that daily chart for something to happen before it'll show up there on the weekly. Okay, so that's the Dow. So the NASDAQ composite next. So on the NASDAQ composite, and I will point out, despite the Dow and the S&P doing these deeper retracements of this initial move down from the all-time high, the NASDAQ really seems to be respecting the 786 retracement level, certainly on these daily candles. You can see at no point did we close. We certainly tested it intraday, but at no point did we close outside that 786 retracement. So that's serving up as a good resistance level so far. And you can see on the NASDAQ, this definitely has a nice corrective look as far as just being an upward correction and needing another leg down here. So I'm still liking the setup on the NASDAQ. Looks like we had a bearish inverted hammer here on Thursday, and then a decent red day on Friday, kind of confirmation of that. And let's see, did we actually take out this candle's low? So that was at 8,086. We got as low as 8,086. So basically, right down to that low, we broke it by a fraction of a point. So a little bit of a reaction off it. So possibly a double bottom here, but more likely, I think, we're going to get some follow through here, and the NASDAQ perhaps will lead this market weakness down if it does materialize. All right, and obviously coming off the overbought condition here on the oscillator, nowhere near oversold. So NASDAQ certainly looks like it wants to turn down here a little more so than the other two indices, and obviously they're all going to move more or less in tandem once it really gets moving. So this could be the early indicator of what's to come. Still can't rule out, you know, an unexpected move up and taking out the highs, but here it still looks reasonable to expect some sort of weakness here, at least in the near term with these unfilled gaps, etc. Okay, now on the weekly on the NASDAQ, let's see what we're working with here on the weekly candles. So on the NASDAQ, kind of looks like a gravestone doji. So we had this hanging man potential weekly hanging man candle last week. And I don't think we actually got above the high of that hanging man. So that was 82.43 this week. It was 82.37. So respecting last week's high, and we put in a gravestone doji. So a bit of a bearish signal here on the NASDAQ. Not a super powerful one. Certainly needs some confirmation. But again, we'll see the action here on the daily well ahead of any real strong weekly signals. Okay, so that's what I wanted to point out there. So on the VIX, I'll have a look at the VIX. Okay, on the VIX. Okay, I think we got something here on the VIX of interest as well. So the VIX doing a very deep retracement of this move up here from, let's see what level that was. Basically the 12 level, actual low is 1169. So from that 1169 level, we had this nice move up in VIX, obviously coincided with that move down in the indices. We've had this, so far, very deep retracement of that, but looks like we got it. Now again, this overall uptrend, this series of higher highs and higher lows on VIX hasn't been broken. That would involve actually getting below this level, so getting below that 1169. But on Friday, I want to point something out. Zoom in here a bit. So on Friday, we did a pretty decent looking reversal candle on the VIX, a bullish engulfing candlestick on the VIX, and let's see if we engulfed how many prior candles. Let me just double check this one's close. This one closed at 13.95. This one opened 13.94. So okay, engulfing 1, 2, 3, 4. Yeah, we engulfed 4 prior candles. So that's a fairly strong buy signal in this case on the VIX, which would obviously coincide with a sell signal on the overall market. And so strong bullish engulfing candlestick, 4 prior candles engulfed, closed above the T line, coming off the oversold condition, nowhere near overbought. So VIX might be giving us a bit of an early sign here of what's to come. Certainly it looks good here on this candle. And if there's anything to point out here on the VIX weekly, let's see. Weekly VIX. Looks like we got a potential bullish hammer here, right around that 200-week simple moving average. So we have both a daily and a weekly bullish candle signal on the VIX. So that's certainly adding a little bit to the bearish case here on the indices. And again, certainly prepared for it to go the other way, prepared to be wrong. And again, that ES contract, you know, I'm only risking 20 points, and if it gets stopped out, well, fine, move on and wait for another setup. But pretty hard to resist that risk-reward scenario for me, especially now that we have some legitimate signals here. Okay, so that's the VIX. Now we'll go to the VIX VVIX tool. I think there's something notable to point out there now, and yes, there is. So we had this, you know, nice signal develop, and it's continuing to develop here. And that's where we have a divergence between VIX and VVIX. In this case, VIX was making new relative lows, while VVIX was making higher lows and higher highs. So that's step one of the signal. And I'll just duplicate this because this is just kind of illustrating where we got above the red moving average on VVIX. We, you know, came down below it again, but again, we're starting to poke above it again here on Friday as of Friday's price action. So we have the VIX VVIX divergence. That's check one for the sell signal on SPX. We're getting above the red moving average on VVIX. That's step number 2. And now we're actually getting below the blue moving average here on SPX. So we're we're in a technical sell signal. It hasn't had much follow through yet, but technically we have all the conditions in place for a sell signal using this tool. So we'll see if we get some follow through here, but given everything currently, the market certainly looks vulnerable to a sell-off. And again, from where I'm currently short, that one contract, I mean, 20 points of risk for, potentially a really large reward. I like it. So we'll just have to see what happens this week. I'm still kind of expecting to get stopped out because this market's just been kind of uncooperative with trying to put a bearish trade on. I mean, it's been a tough market to get a good directional trade going here. It's been choppy, but this could be a good one. We'll have to see how this week develops. And okay, that's probably all you need to say heading into this current week. Certainly, if something big goes down, I'll do an update video. All right, Serial Trader signing off.